So in this video, we want to talk about Shopify, and we recently had earnings a couple of weeks ago, and on the news, price sold off. Why did it stop at $270? That was recent highs. So that was resistance, and now it became support. One person that brought the dip, though, she goes by the name of Cathie Wood. And so before we continue with the analysis, let's look at this article. So Cathie Wood has developed a strong following among investors for anticipating digital trends that accelerated early in the pandemic. She's a fan of Shopify. She's been owning them for a while, but last year she started selling her Shopify bag. However, on the dip, she started scooping up shares again. And what a dip it was. When they announced their first quarter results, the stock dove 26%. Why? Well, gross margins. Although gross margins has increased year over year, management expected to decrease a little bit, about 50 basis points, to around 50.9% in the second quarter. Now, the dip also is due to Shopify's high valuation. Stocks trades at a price to sales ratio of 16 earlier this year, and was still above 13 before Q1 report. Those are high sales multiples, and it didn't take long being off in the quarterly report to erode markets' willingness to keep supporting them. However, double-digit percentage sales growth every quarter, and its profitability is improving steadily, and cash flow tripled year over year to $232 million. So that's the good part. They're growing. Management also sees huge market opportunities. One is in physical commerce. So offline gross merchandise volume increased 32% year over year. You also had business-to-business commerce that experienced 130% increase in gross merchandise volume. But you can't ignore its valuation. The stakes are high for Shopify, and the company has little margin of error. Even Wood's position in it is much smaller than it was 13 months ago. All right, so this was a first target at $320. Why? Well, we got to scroll out to the weekly chart to see that. And that's where we see back in January of 2021, you got some support, now resistance at that level. I do want to go back to the daily chart because I want to look at this cluster of trading a bit more granular. Yeah, so it's nothing but sideways trading, which is going to serve as quicksand if and when price is above the $320 level. Now taking it down to the 4-hour chart. As you can see, the sell-off. It's been a grind. Higher highs, high lows. And we're currently in phase for the next leg up. So what do you think? Shopify going to go higher? Is it going to stop at $320? Is it overvalued? Does it have a bright future? Leave me a comment. Thanks for subscribing. Please like the video.